Uh, Good morning, students. Harshal, Isha, Tanisha, Amar, Maithili, Sridhar, Vedant, Vishakha. Good morning, everyone. So, I hope you are preparing well for your income tax, right? Okay. Uh, so, today we have completed the chapter of Advanced Tax, TDS, and TCS. Any queries in that before we start with today's lecture? Any queries in the last topic we have covered? Harshal, Maithili, Tanisha, Vishakha, Sridhar, anyone? Any queries? Okay, fair enough, clear, good. Next is, let me share my screen. See, whatever theory topics, some are very, very theoretical topics, which we understand in technicalities, but don't read it line by line. Please do cover it side by side. Don't leave those topics. My request to everyone. So today we are going to start chapter number 8. This is return filing. Chapter number 8 is for return filing. Very interesting topic. Very good topic. So, if you remember in yesterday's session, I had shown you how to prepare the returns, right? I had shown you a software, right, everyone? Just a second. So I had shown you a software for the return filing. Today we are discussing now what is the for the income tax we have a PAN number. We will start our discussion today. For the income tax we have PAN number. Now, if you have the PAN number, is the return filing mandatory? If you have the PAN number, is the return filing mandatory? Everyone, what do you think? If you are having the PAN number, Harshal says no. Right. See, having a PAN number doesn't mean you have to file your income tax return. There are other conditions that you need to check. There are other conditions that you need to check. Okay. Now, this PAN number doesn't mean you have to file your return. Now, there are certain cases. Now, firstly, we are discussing those cases here. Compulsory filing of return. Compulsory filing of return. What are those cases? Now, let's make up two charts. If it is company or firm, if it is company or firm, then ITR is always mandatory. If it is the case of a company or a firm, ITR is always mandatory, whether you have income or loss. Whether you have income or loss, it is always mandatory. Okay. Next. Next, it says for the others. For the others. For the others, there are certain conditions that you check. Now, there are 5 types of conditions. There are 5 types of conditions that we check. First is if income is greater than basic exemption limit. If income is greater than basic exemption limit, BEL means basic exemption limit, or I can write here basic. What is the basic exemption limit? In case of old scheme, it's 2,50,000, 3 lakh, and 5 lakh, depending on your senior or super senior. Or in case of new scheme, it's 4 lakh, and there is no senior concept. So if income is greater than basic exemption limit, then ITR is mandatory. Now, which income? Here you write the word total income. If total income is greater than basic exemption limit, okay? Just write it if total income is greater than. And how do we calculate the total income? GTI minus deductions, that comes the total income. Second, if you are ROR, you have already discussed the residential status. If you are resident and ordinarily resident, this condition is applicable only if you are ROR and you are beneficial owner. You are beneficial owner of asset outside India. There is any foreign asset that you own, you are the beneficial owner, or you have signing authority, Let's suppose you have bank account outside India and you have signing authority in that bank account that you need to report. Even if your income is, let's suppose your income is null, you don't have any income, still you need to file your tax return. If this is the case. Or if you are beneficiary of any asset, outside, then the return filing is mandatory. Third condition says if income before deductions, which deduction? Chapter 6 deductions, and before capital gain exemptions, right? Capital gain exemptions like section 54, 54F and all 54 series. If your income before deductions or before capital gain exemptions is greater than basic exemption limit. Now tell me, in third point we see, let's suppose we are, first of all, if we have capital gains, if we have other, let's suppose we have other incomes, we have capital gains, then we have section 54, then it is GTI, then it is deductions, then it is total income. It is asking us to consider this total. We need to consider the income before section 54 without giving effect to it and without deductions, right? Now what do you think? If we are taking the income before deductions, but in the first point we are taking total income means this income, is first point relevant or third point more relevant? Is first point more relevant or third point will more relevant? If I state, are you able to get me? Let's suppose third point is more relevant. Harshal saying third point is more relevant because we are already considering a higher income. We are not giving section 54 exemption. We are not giving deduction. So ideally the income will be higher in this case. So ideally first point becomes irrelevant. Because there is a third point, right? So then you need to file your mandatory return of income. And second point is applicable only when you are ROR. Second point is applicable only when you are ROR. Then there are last 2 points. If you enter into any specified transaction, there are 4 transactions A, B, C, D that are notified. Last is if you enter into if there are other conditions, if you satisfy any of the other conditions, you need to file your return of income. There are 4 conditions: first, second, third, fourth, that we will see in the book. First of all, is this chart clear? Is this chart clear, everyone? Okay. Okay, let's go to the book. Provision for filing return of income and self-assessment. So we will discuss these provisions. Compulsory filing of return 139.1, return of loss 139.3, belated return 139.4, revised 139.5, and updated return. These are very important. Then 234A interest we already discussed, and there is a fee 234F we will discuss. Now these two things are this is the most important portion of this chapter. And there are other provisions. Here the questions come from quoting of pen and all, but these are more procedural. You don't require much of my explanation, you just need to study it. You don't require much of my explanation in this. Okay. So the other provisions are more procedural, and the first 2 are important ones that we will cover in detail. Return of income. The Income Tax Act 1961 contains provision for filing of return. Return of income is the format, the assessee furnishes the information. A general theory is written here. Compulsory filing of return. First point. As per section 139, it is compulsory for companies and firms. It is compulsory for companies and firms to file a return of income or loss for every previous year on or before the due date in the prescribed form. In case of a person other than a company or firm, filing of return of income on or before the due date is mandatory. If the total income, can you see companies and firms are covered in first point, on or before they need to file, and other than company or firm, they need to file before the due date if total income in respect of which he is assessable under the act is exceeding the basic exemption limit. If total income exceeds the basic exemption limit, our first condition. Then every person being resident other than not ordinarily resident but other than NOR, it means ROR. It means ROR. In India, within the meaning of section 6.6, who is not required to furnish return under section 139.1, assessable income, where is written assessable income? Okay, or the total income of any other person in respect of which he is assessable. Anchal, do you understand? Ideally, you should understand the meaning of it. See here. Second point only I'm talking about. You're talking about this point, right? If the total income or the total income of any other person in which he is assessable, right? You're asking about the word assessable, Anchal. Now tell me, have you studied clubbing of income? Or any other person in respect of which he is assessable? Let's suppose I have minor child, that income is clubbing in my income. So let's suppose my income alone doesn't exceed total income, but including the minor child, it exceeds the total income. It exceeds the basic exemption limit. Then I also need to file. Every person being ROR in India within the meaning of section 6.6 who is not required to furnish return of income under 139 would be required to furnish return of income or loss for the previous, the prescribed form is verified the prescribed owner before the due date. If such person at any time during the previous year holds as a beneficial owner, he is the beneficial owner, whether or not he provided the consideration of any asset located outside India or signing authority in account outside India. Let's suppose person is having a bank account outside India and he doesn't have any income, but still he would be required to file the return. Or if he is the beneficiary, let's suppose it is not my account, someone else gifted me that asset, but I am the beneficiary, including any financial interest in any entity. Let's suppose I own the shares of any company located outside India. However, an individual being a beneficiary of asset located outside India would not be required to report under this clause where if income arising from such asset is included in the person referred to in one. Beneficiary is not required to file the return of income if their income is included in the total income. Now, what is the meaning of beneficial owner? Beneficial owner means an individual who has provided directly or indirectly consideration for the asset for the immediate or future use of benefit or himself. Let's suppose I, Mr. A, has purchased an asset. Okay, do you know the cases? In fact, these also came in demonetization time. People purchase the assets in the name of their servants. There were some cases where the government, it was caught. People purchase the assets in the name of servants. So when I am purchasing the asset, I am providing the consideration in the name of servant, I am the beneficial owner, because ultimately that asset will revert back to me. And for the time being, the servant is the beneficiary. Or let's suppose I say I create a trust outside India and the beneficiary is my family. So all those cases will come here, beneficial owner and beneficiary. Beneficiary means who derives benefit from the asset during the previous year and the consideration has been provided by another person. So here servant will also come. Servant has not provided the consideration for the asset. Requirement of filing the return. So this they have just put it in a chart format. Anytime previous year, hold beneficial interest, signing authority or beneficiary. They've just put it in a chart format. Clear? So we have discussed condition number 1, condition number 2. Let's go further. Further, every person being an individual HUF or AOP BOI, whether incorporated or not, or the artificial juridical person, whose total income or the total income any other provision in respect of which he is assessable, without giving effect to section 54 deductions or chapter 6 deductions, exceeded the basic exemption limit. Exceeded the basic exemption limit. So, if the total income without giving effect to section 54 exemptions and chapter 6 deductions, if that exceeds the basic exemption limit, then they are required to file the return of income. They always write prescribed form, prescribed manner, and the prescribed particulars. These are the ITR forms that we file. Do you know how we file it? Let's suppose income tax. If you will go to the income tax portal, e-filing portal, see here, you go to here downloads. Here you can see for assessment year 26-27, all the utilities are there. ITR 1, 2, 3, 4, ITR 5 utility is there, right? So the basic exemption limit is 4 lakhs under the default regime, right? Plus they are saying chapter 6A only 3 deductions are allowed: ATCC2, ATCCD2, ATCCH2, ATJJAA, and section 54, right? However, in case of assessee has exercised the option of shifting out of the default tax regime, the basic exemption limit will be 250, 300K or 500K depending on the number age of the person. Clear? Next, what was the point? I said Other than that, there are four conditions, four transactions, and then four conditions. What are those four transactions? Any person other than company firm who is not required to furnish return under 139(1), but they have done any of these four, A, B, C, D, they are required to file the return. A says has deposited an amount or aggregate of amounts exceeding 1 crore. If they deposited more than 1 crore in the current account maintained with a banking company or cooperative bank, the deposit means, okay, can you tell me what is the meaning of deposit? Is this a cash deposit or all the deposits in the bank, whether through the internet banking or something? Is it only the cash deposit or all the deposits? It is all the deposits. It is all the deposits that we consider. Has incurred expenditure on foreign travel. See, why there is a limit of 2 lakhs? Can you give me the logic behind it? If you have incurred the expenditure of exceeding 2 lakhs on the foreign travel, on travel to a foreign country. Okay, let's suppose I am following the default tax regime. What is my basic exemption limit? What is my basic exemption limit in the new regime? 4 lakhs. 4 lakhs is the basic exemption limit in the new regime. Now tell me, a person who is earning 4 lakhs, can he spend 2 lakhs on the more than 2 lakhs on the overseas travel? A person who is earning 4 lakhs, will he see, understand the difference? In India, there is a population of more than 140 crores. And how many people file the income tax returns? Do you have any idea? How many people file the income tax return? How many income tax returns are filed, including companies and everything, every year? Harshal, 30 CR is a very big number. No. Approximately 8 crores returns are filed. 8.5 and all. 8 to 9 crores returns are filed, including everything. Okay. So can you see the gap? Now, there are many people who are not under the tax ambit. There are many people who are not under the tax ambit. And the government is trying to cover more and more people under the tax ambit. Getting it? Government is trying to cover many people under the tax ambit. That's why they put on such requirements. Now, what the people do? They will not file the returns. They will not show anything, but still they are doing the foreign travels. How it is possible? Without income, how it is possible? So people try to evade the taxes. Government is trying to curb all those practices. Now, next is related to that only. It says incurred an expenditure, electricity expenditure of exceeding 1 lakh. Now tell me, let's suppose even if you don't, even if you do not file the return, but still you will use the appliances. Let's suppose you are a rich person, but you are not filing the return of income. You are not even taken the PAN number. If you are rich, surely electricity is the most important thing. Without electricity, everything stops now. Now you will use the electricity. If your electricity bill is 1 lakh for the entire year, it means you are using many appliances. Your bill is quite heavy, electricity bill. It means your what do we call it? It means you are using much of the appliances and all. It means you are a rich person. You consuming the electricity more, right? So ideally, this will be, if electricity consumption has exceeded 1 lakh, then you need to file the return of income, even if you don't have other incomes, and fulfills any other conditions prescribed. And these are the 4 conditions prescribed. Anil, who says the new finance minister is going to take charge? I haven't heard it. Maybe have I missed something? There is no such news. I don't think so. Okay. Accordingly, the CBDT has wide notification this. They have put these conditions. If total sales in a business, if you're doing business and the total sales is exceeding 60 lakhs, they're not checking your profits. See, what is income? Income is the profit, but they're not checking the profit. It says your business turnover is greater than 60 lakhs, you're required to file return of income. If in a profession your receipts are greater than 10 lakhs, you're required to file return of income. If the TDS or TCS deducted on your account is 25,000 or more, you are required to file return of income. And if you are 60 or more, then 50,000 or more. Or one or more savings account, there is a aggregate deposit of 50 lakhs or more. If you satisfy any of these four conditions, even if otherwise you are not required to file return of income, you will be required to file return of income. Right? Then they say all such person need to file in the prescribed form, prescribed manner, prescribed particulars. Clear? Are we good till here, everyone? Is that clear till here? Okay. Now, meaning of due date. When you are required to file return of income, do you know what is the due date for individual returns? What is the normal due date for the individual return? You might have heard in your family. 31st July. See, one clarification here. Now we are discussing finance. These all provisions we are discussing as per Finance Act 2025. Every year the Finance Act comes, right? Finance bill comes, then it becomes the act. Now, but when the budget comes, now these provisions have changed a little bit now. Not much, a little bit of the provisions have changed. Now there is one more due date added, that is 31st of August. There is one more due date added for the individuals who have PGBP income. Their due date is 31st of August, but that is not applicable for the curriculum. But that is applicable for assessment year 26-27 as well. You are studying assessment year 26-27. That is applicable for assessment year 26-27 as well. But that came from Finance Act 2026, and Finance Act 2026 is not applicable to your curriculum. So as of now, we will study the old thing only, but there is only a minor change is there, not much. The due dates, right? So that is there. Meaning of due date. Due date is normally, see, 31st of July. See the last one first. The due date is normally 31st of July. But in case it is a company, or in case it is a company, then the due date is 31st of October. Due date is 31st of October. If there is a part, let's suppose any person who is required to get the audit done, the audit will take some time. Audit always takes some time. So we are giving them additional time of 31st October till 31st October. Or let's suppose, let me take up here. Let's suppose I'm an individual. I'm declaring my income under section 44 AD, presumptive taxation. Am I getting the audit done? The answer is no. I'm not getting under 44 AB audit done. What will be my due date? My due date will be 31st July. If I'm getting the tax audit done, I'm getting the tax audit done. So my tax return due date will be 31st of October. Now, another thing, if I'm a company, always my due date is 31st October. Always my due date is 31st October. Next, if let's suppose I'm a partnership firm, the normal due date will be, partnership firm normal due date is 31st of July. But if partnership firm is getting the tax audit done, then the due date will become 31st October. Now tell me, is the partner's return based on the partnership return? Is the let's suppose I'm a partner in this partnership, last one. Is the partner return based on the partnership's return? Because he will get interest, salary, profit share, all that. It is based, Isha. It is based. Because after filing the partnership firm's return, you will get to know all the things. Interest, salary, remuneration, right? You would have studied the PGBP provisions. So accordingly, The partner's return. So partners of a firm who which is liable to tax or debt. For them, the due date is 31st October. For them also the due date is 31st October. Clear? Next. Next is, if in any of these cases transfer pricing applies, if in any of these cases, if transfer pricing applies, what is transfer pricing? See, I'll explain you. If transfer pricing applies, then it takes time. They will allow you additional time. So the due date will be 30th of November. The due date will be 30th of November. Now, what is transfer pricing? Do you remember the case when I told you there was an ITL unit and we should follow the transfer price? Let's suppose I have a company in India. I have a company in India. Now I have another company in Dubai. India tax rate for the company is 25%. Let's suppose in the new regime it's 22% plus 25.168% effectively. Let's suppose India tax rate is 25% for the sake of discussion and Dubai rate is 9%. Do you want to show more profits in India or less profits in India? Do you want to show more profits in India or less profits in India? You want to show less profits in India? Let's suppose Indian entity is now this entity is related entity. This entity is related entity. Dubai entity is my related entity. Now we call it associated enterprise. Now, if I am selling, let's suppose sale price, normal sale price is 100 rupees, but I sell it at 60 to the Dubai company so that my Indian company revenue are decreased and Dubai company profits are more. So that's why this type of planning is not allowed. Here the transfer pricing applies. They say as if two independent parties are dealing, you need to do the transactions in the same way. So the sale price should be 100, not 60. Sale price should be 100, not 60. This is the concept of transfer pricing. If transfer pricing applies, there is a section 92E in which we need to furnish a report, TP report from 3CB. Now, in that scenarios, there is additional time given to you, 30th November. Clear? So 31st October is a company or a person whose accounts are required to be audited, or in either law, a partner of firm whose accounts are required to be audited, or 30th November in case of TP cases, who are required to furnish a report under section 92E, and 31st of July in other assessments. Now, more in detail about the transfer pricing, you will study a lot about transfer pricing in the CA final. Is this clear? Is this clear? Okay. The CA has to sign the report, right? Yeah, yes, in transfer pricing cases, you sign the transfer pricing report and 3CB as well. Okay, can you quickly solve this? Okay, students, one thing I'm doing is, give me, let's do one thing. You please solve this question, illustration number 1 in the meantime. I'm just not feeling well. Give me 1 or 2 minutes. I'm just coming back in 2 minutes, okay? I'm just little bit unwell today. So illustration number 1 in the meantime you solve. I'm just coming back in 2 minutes, okay? Paras, age 55, resident of India. During the financial year, he has interest of 2,88,000 credited to the NRE account. Paras is a 30,000 being interest on the fixed deposit from SBI Bank. He also earned 3,000 interest in the saving account. Is he required to file return of income? Everyone, is he required to file return of income? Why no? What is the reason for no? Is interest from NRE account taxable? See here, your answer is correct, but no, not fully. Interest on the non-resident account is non-taxable, right? Yes, if we assume RBI has given approval, right? If we assuming that RBI means if RBI has given the approval, then it is exempt in the 1042, right? Then it is nil. Then 33,000 is the income. So in this scenario, it is less than the basic exemption limit. The return filing is not required. Yes, even it is less than 4 lakh. That is also one of the reason. Another thing is here they have assumed that okay, RBI has given the approval, so that interest also was non-taxable. What will be your answer if you incurred 3 lakh as travel expenditure? Now, if for US travel expenditure to US, now the expenditure in the foreign travel is exceeding 2 lakhs, then in that scenario, the return will be required, even if the income is less than the basic exemption limit. Clear? So this is your most important section. This is your most important section what we have covered for the return filing. Next, specified class or class of persons to be exempted from filing of return. The government can notify a specified class. As of now, nothing is notified. They can say 2,88,000 is exempted. Yeah, 2,88,000 we have considered as exempt. Yeah, in travel expenditure, he is exceeding the limit. Yes, so that's why he is required to file the return. Clear? Can I move? Okay. So moving forward, the government can notify a specified class which. Okay, wait. Firstly, clear all your doubts. Mathili, there is a section 1042. It says interest on the NRE account if RBI has permitted you to maintain it, then interest on the NRE account is non-taxable. You would have already studied this section, right? Okay, Mathili? Harshal, what is the doubt? I asked you in the beginning itself if there is any doubt you can ask. But in between it would be difficult, but at least where is your doubt? Which section? If this is related to this chapter, please do ask now. Else, you can always ask me at the end, okay? I'll stay back. For all the doubts, you can just collate and I'll take all the doubts, okay? Can I proceed now, everyone? Or if there are any other queries on this topic to ask? Okay. I believe all the queries are solved. Specified class, the government can notify in specified class that will be exempted from filing the return. Return of loss, again, this section is important. Now tell me, Anil, ignore that for now. See, you people are again on the previous example. Okay, please ask all your doubts in the previous example. I'll clarify first, then only I'll move. Anil says, how do we get the evidence for the foreign trip expenditure? Anil, if you're going on a foreign trip and you believe the government will not even know it, you will use your passport, you will use your Aadhaar card, you will book a flight ticket, Can that happen without the knowledge of the government in the softwares? Okay. Sridhar is asking which indicator to assume it is permitted by RBI. This question, there is no indicator. Normally, whatever we assume, we assume. So you could have also assumed separate otherwise. But it's fine to assume. If there is any specific provision applicable with the assumption, it's better to assume that. Right? Okay. Now do ask if you have still have any other doubt in the previous example. Clear? Can I move ahead? Everyone? Can I move? Okay. Okay. Now I'm moving. There is next section 139.3. Now these sections numbers you remember. There are certain section numbers that I will ask you to remember. If you will come to your page, this one, yeah. Here all the section numbers are written. Compulsory filing of return was section 139.1. Now this 139.3. Please remember these 5 section numbers. 5 and then these 7 section numbers must to remember. 139.1 was the compulsory filing of return. Now there is a return of loss. Do you remember the set off chapter? Do you remember the set off and carry forward of losses? We discussed there was a paragraph at the end of the chapter given. If you want to claim the loss, you need to file the return on timely basis. 139.3 loss return. Let's suppose you have a loss on your return. You have a loss on your return. Let's suppose you have capital loss. You have capital loss. You want to see either you can adjust it, but let's suppose you don't have any other capital gain income. You don't have any other capital gain income. Can you adjust against other incomes? Can you adjust capital loss against salary income? The answer is no. Short-term losses can be adjusted against short-term or long-term, and long-term losses can be adjusted against long-term only. That is the provision. And if you are not able to adjust, if you're not able to set off, then you will carry forward the loss. Carry forward the loss. But this carry forward is allowed only when you file the return on timely basis. You file the timely return. Within the due date we discussed under section, within due date we discussed under section 139.1. Only when you timely file the return within due date. Because there were 2 losses. No, there such limitation doesn't apply. Can you tell me those 2 losses? There were 2 losses on which these limits would not apply. You can even file the return late and you will get the credit. Can you tell me those 2 losses? Speculation was not there. One was the house property loss. Another one was unabsorbed depreciation. You all have forgotten. Let me take you to the set of chapter. You will remember it. This is a chapter for set off we discussed. Do you remember this? Submission of return of loss. This you need to submit within 1/3 and within the time allowed under section 139.1. Plus it says this condition doesn't apply to house property loss and the unabsorbed depreciation. Remembering it? So same is the section here. It says section 80 requires these losses. For these losses, you need to file a timely refund return. 72.1 business speculation loss, specified business loss under the head capital gain owning maintaining resources. Consequently, 139 requires filing of return mandatorily within the time allowed under section 139.1 for claiming carry forward of loss. However, the loss under the head income from house property or unabsorbed depreciation can be carried forward for set off even though the return of loss has not been filed before the due date. A return of loss has to be filed in his own interest and the non-receipt of notice. You need to file your return on your own. You don't have to wait for the assessing officer notice. You need to file your on your own. Clear? So this is 139.3 return of loss. Next. See, these section numbers I'm asking you to remember because these are very, very important. Belated return. 139.4. What is the meaning of belated? I think you would recall we wish people belated happy birthdays, right? Means it is after the normal date has passed, right? The normal date has passed. Now there is a concept of due date and last date. What is the due date? Due date means before this work should be done. Where is 139.1c? Anchal, there is nothing which I have skipped. I have explained this, Anchal. Where were you? There is the government can notify a specified class of people, and the government has not notified anything. Okay, for now, they can exempt some people from the return filing. There are some one or two cases which they have, but very nominal. You don't have to discuss it. Okay, there is nothing in it. Very theoretical as of now. Belated return. See, there is a concept of due date. It means, let's suppose my return due date is 31st of July. My return due date is 31st of July. So this is my due date. By which date, by this date, I need to file the return of income. But if I don't file by 31st of July, can I file late? Can I file late? The answer is yes, you can file late. How much late you can file? There should will be some last date after which you will not be able to file. This is called last date. After this, you cannot file. Like, let's suppose your CA examination forms. You get a date. By the due date, you need to fill the form. But sometimes with the late fee also, you can submit the form. But after the date is gone, then no, you cannot. After the last date is gone, then you cannot submit the form ever. After this, you cannot file. Now, let's suppose an individual is there. He is required to file a return. He don't file it. He doesn't file it. But this date will be 31st of December. Till 31st of December, you can file. Otherwise, you cannot file. Okay. Till 31st of December, you can file. Otherwise, you cannot file. Now there is a minor amendment here from the Finance Act 26. They are also allowing you additional 3 months for the revised return and all, which we will not discuss because that is not applicable to your case. We will only discuss the provisions which are applicable to you. Okay, I'll not confuse you much on that. So this is a belated return. This is the concept of belated return. Next. So see here, a person who has not furnished a return within the time allowed him may furnish the return at the previous year at any time before 3 months prior to end of the relevant assessment year. We are following assessment year 26-27, end is 31st March 2027, 3 months prior, 31st December 2026. 31st December 2026. Or before completion of assessment. Let's suppose now, see, let's suppose till 31st July was your due date. You haven't filed your return. Can assessing officer assess your case? Let's suppose I didn't filed by 31st of July. Now AO assesses my income on 30th of September 2026. Can I file the return now? Can I file the return now? The answer is, if the AO has assessed my income, I will not be able to file the late return. So it is 31st December 2026 or before completion of assessment, whichever is earlier. Before completion of assessment, whichever is earlier. And since belated return cannot be filed after 31st December. So this is the concept of belated return. You can file the return late, but up to 31st December only. Next is 139.5. Let's suppose this is called revised return. This is called revised return. Let's suppose you have filed your return on 25th of July 2026. You have filed your return on 25th of July 2026. Now next thing is you have filed your return, but you missed, you have done some mistake in it. Let's suppose you missed reporting some income, or missed, you have done any of the error. You missed claiming any deduction. For any reason you are not able to, you want to revise your return, you haven't filed it correctly. Can you revise your return? Yes, you can revise your return up to 31st of December. Up to 31st of December 2026. You can revise your return. Now, how many times you can revise your returns? How many times revision is allowed? You can file as many times as you want. You can file the revised return as many times as you want. Let's suppose now one issue arises. Let's suppose I had filed my original return on 25th of July. It was timely filed. There was a loss on the return. There was a loss on return. And I filed my revised return on, let's suppose, 25th September 2026. What do you think? Now this is the new, when revised return is filed, old is discarded. When the revised return is filed, old is discarded. Only the revised one will be considered. Now the return is filed on 25th of September. What do you think, this loss will be allowed or not? What do you think, this loss will be allowed or not? For the loss, the return was required to be filed till 31st of July itself. Whether this loss will be allowed or not, what do you think? There is a very famous saying we say, revised return steps into the shoes of original return. Very famous line we say, revised return steps into the shoes of original return. It means even if revised return is filed on September 25, it will be considered as if it has stepped into the shoes of original return. So it will be considered filed on 25th of July and the loss will be allowed. Loss will be allowed. So the revised return replaces the original return, but it steps into the shoes of the original return. Right, because the original was filed in time, the loss will be allowed. Clear? Revised return is 31st December 2026 or before completion of assessment, whichever is earlier. This is the recap of till now: mandatory filing of return, then due date of filing, then loss return, then belated return, then revised return. All this we have discussed. This chart is very good. Please do study it yourself. We have discussed all of these things. So can we revise quickly? 139.1 is for mandatory filing of return. 139.3 is for loss return. 139.4 is for belated return. 139.5 is for revised return. Good till here, everyone? There is one more section we will study, the updated return, that we will come to. This illustration you can do as homework. Interest for default in furnishing return of income. Have we discussed this section earlier? 234A. I covered it yesterday as well. Yesterday. If you file the return late, late means after the due date, after the specified due date. If you will file the return late, then based on the unpaid taxes, 1% per month, part of the month, 234A interest will be levied. Interest under section 234A is attracted for failure to file return of income on or before the due date. If you have not filed on or before the due date, interest will be attracted. Interest is payable where an assessee furnishes the return of income after the due date or doesn't furnish the return of income. Simple interest, 1% per month or part of month. 1% per month or part of month. Okay, Neil, I'll come to it. Let me complete this. I'll come back to it. Okay. Now, where the return is furnished before the due date, after the due date. Okay. Let's suppose if the return is furnished, return was to be filed on 31st of July. Return was to be filed on 31st of July, but you have filed it on 25th of September. How many months interest will be charged? You filed it on 25th of September. How many months interest will be charged? You filed the return late. 234 interest will be charged for how many months? Vishaka says 3 months. Vishaka, which 3 months? It will start from 1st of August. August and September, only 2 months. Vishaka, the last date is 31st of July. You can file till midnight of 31st of July. The interest will start from 1st of August, August and September. So where the due date is, where you have furnished it late till the date of furnishing of return. Where you have not filed the return at all, then assessing officer completes the assessment, then it is till the date of assessment. Now, how the things practically work, let me tell you. Let's suppose, give me a moment, just a second. Sorry. So revise it. Sorry, okay, I was discussing the current. Let's suppose you haven't filed your return. You haven't filed your return. Now, your return, you are required to file the return by 31st of July 2026, right? You haven't filed your return. Normally, assessing officer doesn't assess you now. See, is it practically possible for the assessing officer to approach every client, every assessee? It is not practically possible to approach every assessee. Now, what they do, the system flags it. What the system will do? Let's suppose this person was earning salary. This is how the things practically work. Let's suppose this person was earning salary income. If salary income there, he would have earned form 16. He would have got form 16, right? He would have received form 16. Then another thing, in fact, I tell you my practical case. I dealt this type of case, I think 3 years ago, or 2 years ago, I think. The person has received form 16. The person was earning very good salary. His salary was approximately 40 lakhs. The form 16 was also there, but the return was not filed. So there is an information in the 26 AS as well. The government gets out of TDS deducted, AIS, TIS. The system flagged it. There is a section 147. It is called income escaping assessment. The government will say, okay, you have escaped the income. You have not paid the taxes. We will do the income escaping assessment. And there is a time limit for it. There is a time limit of 3 years as well here. Other time limits are also there. There is a time limit of 3 years. Now, this was, let's show you a section 147 time limit. Let me show you. Generally up to 3 years from the end of the relevant assessment year, right? There is a notice that they issue. So let's suppose it was assessment year is 2026-27. From the assessment year end, you take 3 years. So it is 31st of March, 28, 29, 30, 2030. You will not get the notice today. Believe me. Let me tell you, you will not get the notice today. The system flags it and assessing officer takes action towards the due date. The due date to open the case is 31st of March. They will issue you notice, let's suppose in December 2029. They will issue in January 2020. Let's suppose they issue the notice in January 2029. And then they give you a chance to file the return of income. They give you a chance to file the return of income. Let's suppose you file the return in April 2030. After March, you normally file the return. You file in April 2030. Now, can you see? You have not filed the return on 31st of July. You were required to file a return and you are filing it on April 2030. How many months interest will be there? Can you think of? For 2026, August, September, October, November, December, 5 months. For calendar year 2027, there will be interest of 12 months. For 2028, 12 months. 29, 12 months. 2030, there will be interest of 4 months. Can you see? 45% interest will be charged. 45% interest will be charged. 1% per month or part of the month, right? 45% interest. And this story will not stop here. This is only 234A. 234B will also be there. 234C will also be there. Can you imagine the so much of interest? And let's suppose if this person would have filed the return, 234A is nil. 234A is nil. That's why the return filing is very, very important. Right? That's what it says. Till the date of completion of assessment where no return is furnished, the interest is levied. The interest has to be calculated on the tax on the total income. Okay. They say on which interest has to be calculated. Now, no section 234A interest is charged on self-assessment tax paid. If you have already paid some taxes, then 234A is not charged. It is only when the taxes are due. Next, interest payable under section 234A shall be reduced by the interest, if any, paid on the self-assessment tax. If you already paid some interest, you will reduce that amount. So, general theory you can read. Clear? Have you studied section 143.1 in any of the classes, by the way? Have you studied 143.1? Okay. Again, this is not in detail in your curriculum. This is just a reference is there. I'll explain you. Again, you don't need to study this in detail, believe me. Let's suppose you file your return. You file your return on 25th of July, 2026. First of all, the return is processed by system processes the return. There is a centralized processing center, CPC, Bengaluru. In Bengaluru, there is a system CPC, centralized processing center the government has. They have only the system works here. Only the system works here. There is no manual intervention. When you file your return, the government has already some data. The government already has some data. Government will verify your return with that data. Government will verify that return with your data. Okay. If there will be any inconsistency, they will raise a demand. They tell you they will send you 143.1. Okay, they will say, okay, this is what is returned, and this is what the assessed. Okay, they will tell you your income. Let's suppose your income is 10 lakhs. They will say, okay, returned income is 10 lakh, assessed income is 10 lakh. Let's suppose they will calculate the tax to be 1 lakh, 1 lakh. This way they tell you. Let's suppose there is any, if they assess the tax to be 1.1 lakhs, they will raise a demand of additional 10,000. So this is how it works. Every return is being processed on 143.1. You will get a system processes the return. You will get a CPC Bengaluru. You will get a intimation. We call it intimation of processing of return. What does part of month mean? How it will be calculated? So Shmita, very easy. Here, let's suppose this person has filed the return on 25th of April, but we will consider the full April month. We will consider the full April month. That is how the part of month is calculated. Clear, Sushmita? Okay. Self-assessment. After confirmation as intimation sent to assess for department. See, once you receive the intimation, if there is nothing due or everything is closed, if they raise any demand, then you file an appeal against it. If you don't want to pay the demand, either you pay the demand or you don't want to pay the demand, you need to file an appeal against it. 143(1). After that, section 140A. What is 140A? Self-assessment. You know, you need to self-assess your tax. You calculate your taxes payable, then you reduce whatever tax is already paid, TDS deducted, collected, any relief, AMT credit, all that you reduce, and then you calculate your final tax liability that you pay as self-assessment tax. Order of adjustment. Let's suppose you have not paid the taxes in full. How the partial taxes will be adjusted? First, you will adjust the taxes against the fee payable, then towards the interest, then towards the tax payable. This is the order of adjustments, right? First, the taxes will be adjusted against fee payable, then the interest, then the tax payable. Interest under section 234A is levied, that we have already discussed. Interest under section 234B is levied for the self-assessment. And if you do not pay, then you will be treated as assessee in default. Clear? Is this concept clear? Now, one of the very important concepts, updated return. Updated return. Very important concept. This is also known as 139(8)A. 139. Please do remember this section number as well. 139(8)A. Subsection 8A. Updated return. Okay. Can I move everyone? Everyone is clear till here? Once I start the updated return, I don't want any query from the previous topic. So if, please give me a confirmation to move ahead. Okay. Updated return. See, if any queries are left, I'll surely stay back. Okay. There is no problem. I'll clear all the queries. What is updated return? Let's suppose the due date to file the return is 31st of July 2026. The last date to file is 31st of December. Let's suppose you missed reporting any income. You missed reporting an income. Earlier, there was no provision to file the return after 31st of December. Earlier, there was no provision to file the return after 31st of December. Then the government said, okay, people wants to file the return. People wants to file the return late. They are ready to pay extra taxes. They said we launched the concept of updated return. You can file updated return up to 48 months from end of assessment year. What is my assessment year end? 31st March 2027. From this, you will get 4 years. It means 31st of March 2031. Do you think government will do it easily? Earlier, the filing was not allowed. Now they are allowing filing for 4 years. It means government will charge you something extra. If they are giving you this benefit, they will charge you something extra. First of all, if they are allowing the late filing, will it be for the benefit of assessee or for the benefit of department? It will be for, now the updated return will be for benefit of department. What does it mean? See, I'm writing in very layman terms. The exact language in the book, you already have it. I just want to make you understand. The updated return will be for the benefit of department. I'll come to Anil. Anil, give me some time. I'll come to the 4 years reason as well. Okay. The updated return will be for the benefit of department. It means either additional taxes will be paid or losses are reduced, or refund is reduced. If you want to increase the refund, can you file it? If you want to claim the additional refund, can you file it? It cannot be for the benefit of assessee. If it cannot be for the benefit of assessee. If you want to increase the refund claim, you cannot do it. You can only pay additional taxes or reduce your losses or reduce your refund. It cannot be for the benefit of assessee. Now, let's suppose you filed your original return. And the tax was 50,000. The interest was 2,000 that you paid. Total is 52,000. And you have paid 52,000. Clear? Let's suppose this was what you filed in the original return. This is what you filed in the original return. Now, let's suppose you are now filing the updated return. Now, the tax is, let's suppose you have forgot to report an income. Now you reported the income. The tax is 80,000. The interest has become 5,000. Total has become 85,000. The government says we will charge you some additional taxes. Now you will see an interesting point here. The government says we will charge you some additional taxes. Let's suppose this return is for assessment year 2026-27. You are filing it on let's suppose 1st of May 2027. So after the end of the assessment year, within 12 months you are filing. So there are 4 cases. They say if you file up to 12 months late, or you file up to 24 months late, if you file after 12 months but before 24 months, or you file after 24 months but before 36 months, if you file after 36 months but before 48 months. Now they say if you file after 20, there will be additional tax of 25%. Here there will be additional tax of 50%. Here there is additional tax of 60%. Right? And the last one, there is additional tax of 70%. This is the additional tax you need to pay. Can you calculate the additional tax in my case now? My return is how much late? End of the assessment year, 31st March 2027 to 1st of May. It is only 3 months late. So it is up to 12 months. It will be covered in the first scenario. Can you calculate the additional tax here? What is the additional amount that I'm paying? Can I say 80,000 minus 50,000? 30,000 is the additional amount on this 25%. On this 25%, additional tax will be 7,500. Can I say this? Additional tax will be 7,500. Can I say this? Yeah, I've already paid. I have paid 52,000. That I will already take as a credit. That I will surely take as a credit. So my total will be here, 40,500 that I need to pay. Are you with me, Vishakha? But this is wrong. I have intentionally done it wrong. You will not take 7,500. See, the government has played very smart here. They said interest also you are paying additional. We will also charge you on the interest. You compare like this. 85 I am paying here. Earlier I was paying 52. So 33,000 is the additional, not 30,000, including interest. Additional tax including interest. So additional tax is 30 and additional interest is 3. So it is 30 plus 3. On this, you will charge 25%. The government has played smart here. So it will be 8250. So 85 is your normal liability plus 8250 plus 52,500 minus. So the additional tax will be 41,250. This is the total amount that you will pay. Pay for updated return. This is the additional amount that you need to pay. So same way, if your return is after 12 months late, but before 24 months, they are charging you more extra because your return is more late, 50%, then 60, then 70% accordingly. Clear? Are you with me till here? Okay. Let's do one thing. Now let's take a quick break. Then we will read about updated return. See, now updated return is one of the very important topics. After this topic, after the updated return topic, there are many topics which are very simple. Quoting of PAN number and all that, most of it is the reading only. So I'll give you those topics for the reading. I'll explain you, but I'll not read it. Then you can read it at your pace at your home. Okay. So it's 8:24. We'll meet in 10 minutes. Let's take a quick 10-minute break. Please explain. Anchal, this one? Okay, let me take a few questions. Explain again how we calculated. Anchal, very simple. Here, how much is the additional tax? Can you see? 80,000 is the tax, 50,000 I have already paid, 30,000 is the additional. Same way, interest is 3,000 additional. Total is 33,000 I am paying. How this 41,250 has come? I am paying this 33,000 extra. Plus, there is an additional tax for allowing this benefit government to allow filing late. They will charge you 8250 extra. The total is coming 41,250. How this is 33,000 additional, 33,000 additional. On this, I take 25%. That is because as per the time limit. So it is coming 8250. Clear, Anchal? Revised return is exclusively for one assessment year. Updated return is for multiple assessment year. Yeah, revised return is for last assessment year when you file the return, right? And also, okay, one more thing quickly note, then we will go on a break. Revised return you can file multiple times, as many times you want. Well, updated return can be filed only once per year. Only one time you can file this return. You cannot file the updated return every single day, every other day. Clear? Only once per year it can be filed. Okay. So let's go on a 10-minute break. It's 8:26. We'll start in 10 minutes. Thank you. Okay, students, can we start? Are you back? Can we start, everyone? Okay, updated return. You have the option to furnish the updated return. It is not mandatory. If you want to file, you can file. Next is within 48 months from the end of the relevant assessment year, you have time. So someone was asking, what is the logic of this 48 months? I think Anil was asking. See, earlier, this updated return was allowed only for 24 months. The government had seen the people wants to file the return. They are ready to pay extra taxes, but they want to file the return. Why the government introduced this? The government says there are a lot of litigations going on in the taxation. If we will not give a provision to file the updated return, the litigations will continue to increase. That's why, in order to reduce the litigations, they have allowed to file the updated returns so that taxpayers, by giving some additional tax, are relieved of the liabilities and have a peaceful mind. First reason. Second, in the initial, the updated return was allowed only for 2 years. But then government had seen this is a great success. The government is getting a lot of taxes through this return. People are ready to pay it. Then they said, okay, we will extend it to 4 years. Now from 2 years, it has extended to 4 years. So 4 years, I think, extended last year only. So I think last year only it was extended to 4 years. Clear? Updated return. So updated return is return of income, section 139(a). Within 48 months, you need to file. This is irrespective of whether or not he has furnished a return under section 139(1) or belated return 139(4). Whether you have furnished, whether you have filed a return or not filed, or you have filed belated return, revised return, whatever it is, you can still file. Non-applicability of, you cannot file the updated return if this is a loss return, has the effect of decreasing total liability, or has the results in increase of refund. Then you cannot file it. Updated return can be filed if original return is a loss return, updated return is a return of income. If earlier there was a loss, now we are generating an income, then also updated return can be filed. Updated return has to be furnished for subsequent previous year in case 3 above. Let's suppose you have revised. Now you can file the updated return for 4 years. Let's suppose you have filed the updated return for 2023-24. For assessment year 23-24, you have filed the updated return. And there was unabsorbed depreciation which was reduced. Let's suppose unabsorbed depreciation was there, which was reduced. Or let's suppose there was a loss carry forward which was reduced. Now, this loss is further, see, ultimately carry forward happens at every level. Next year, assessment year 24-25, you have used this loss. You've used this loss. If you are amending the assessment, if you are filing the updated return for 23-24, will you also file updated for 24-25? Will you also file updated for 24-25 because this loss was used here? So you will also file updated return for subsequent years in such cases where it has the effect of decreasing the losses. Revised return and independent returns are separate. See, first of all, till the time you can file revised return, you will always file revised return, because revised return, there are no limitations. You can reduce the losses, you can increase the losses, you can increase the refund, whatever it is. You can do all of the things in the revised return. See how it practically works. Let me tell you. Even both options are not simultaneously available on the return portal. Let's suppose for previous year 25-26. Previous year 2025-26, the return filing will start on, the return filing normal due date is 31st July 2026. This is the normal due date. Revised return can be filed till 31st December 2025. Right? This is the normal due date. This is the revised return. Now, after the time limit for revised return is over, then only the filing for the updated return will start. And this will continue till 31st of December, sorry, 31st of March 2026. Sorry, this is will be 31st December 2026. 27, 28, 29, 30, 31. 31st March 2031. In this time, you file the updated return. Is this clear? So they're not simultaneous. Once the time is crossed, then only you file the updated return. Clear? So updated return to be furnished for subsequent year. In the losses, I have also given you this example. Circumstances in which updated return cannot be furnished. If he has already furnished an updated return, if he has already furnished once, if the return has already been filed once, you cannot file the updated return again. Or second, if there is an assessment going on, assessing officer is already completing your assessment, then you cannot file the updated return. Updated return for assessment year cannot be furnished by such class of persons as to be notified. Clear? The more detailed provision of the updated return are covered at the final level. Next, tax on updated return. I have told you, in the updated return where no return is filed, you will calculate the interest, fee, everything. You will calculate the tax payable, manner of tax computation. Same way you will compute the tax payable minus TDS, TCS, relief, AMT. Interest under section 234A also you will apply as if the return, if no earlier return is filed. Where the earlier return has been filed, then you will calculate the interest accordingly. It's a simple theory. You will just take into consideration TDS deducted and all. Then 234B, when earlier return has been filed, you will accordingly adjust the amounts. Interest under section 234C also applies. Then you calculate the additional tax as well as the additional interest. You pay the additional income tax. How much? If this is within 12 months from the end of the assessment year, 25%, very important to note, 25% of the tax as well as the interest. Interest is also very important. People do 25% of tax, forget about the interest. Even it is the interest, 25% additional tax. Then 50% if it is within 24 months. If it is within 36, after 24, within 36, 60% additional tax that you pay. And it is after 36 months, before 48 months, then 70% additional tax you pay. Clear? Power of CBDT to issue guidelines, they can issue the guideline. Clear till here, everyone? Now you just need to read whatever we've left in the updated return, because some things I haven't read line by line. You just read it, it will be very clear. Now this question is very, very good. Let's do it. It's important. Rishi, a 34-year resident individual, he didn't file his return of income for the previous for the assessment year 2021, 21-22 to 22-23. For 3 years, he hasn't filed the return of income. For assessment year 23-24, he has filed the return of income. He filed an updated return for 31st for assessment year 24-25. He is given the following information. In May 25, Rishi came to know about the loss from the house property which he forgot to claim in return of income for assessment year 23-24. In 24-25, he has earned dividend income. This he has not reported in the return. He approaches you on 16/5. Now he is coming to us on 16th of May 2025 to file the updated return for all the assessment years. Tell me, if he is coming on 16/5/2025, can he file updated return for 2021? Assessment year 2021, 31st March 2021. 4 years from there, it will come 31st March 2025. Can he file the updated return on 16th of May for assessment year 2021? The answer is no. Because the 48 months have already lapsed, he cannot file the updated return for this year. Second, assessment year 21-22. The tax liability is 5,60,000. The TDS deducted is 10 lakhs. Can they file the updated return? Can they file the updated return? Tax is 5,60,000, TDS is 10 lakhs. There will be a refund on the return. There will be a refund on the return. Can you file updated return? The answer is no. Because there will be refund, you cannot file it. Assessment year 22-23. Assessment year 22-23. It says 6,30,000 is the tax liability. TDS is 2 lakhs. Interest is 90,000. Self-assessment tax paid is 1 lakh. Can you file updated return? The answer is yes. Right? Now, how much will be the additional tax? So, see here. Assessment year 22-23. This is illustration number 33. The tax liability is 6,30,000. Then they have already paid the TDS. TDS is already deducted 2 lakhs. Right? Next is interest is 90,000. And self-assessment taxes 1 lakh. This is the 4,20,000. This is 4,20,000. You now how much the return is late? You are filing on May in May 2025 for assessment year end. It is April to May from 31st of March 2023. From 31st of March assessment year end, 31st of March 2023. If you add 24 months here, it will come 31st of March 2025. So it means the return is filing in May 25. It means it is coming between 24 to 36 months. How much additional tax will apply? 60%. 60% additional tax will apply. 2,52,000. 2,52,000 additional tax will apply. Next, assessment year 23-24. They say there was a loss from the house property which they forgot to claim. Can we file the updated return to claim the losses? Can we file updated return to claim the losses? The answer is no. Then assessment year 24-25. It says assessment year 24-25 he has earned dividend income from this A and B for which he has not reported in 139A. He approaches you. Okay. There is a line given here. He filed updated return under section 139A for assessment year 24-25. If you have already filed the updated return once, can you file it again? Can you see the scattered information is given here? You cannot file it again. So only for one assessment year you can file these returns. Other 4 you are not eligible. Clear? So there is a scattered information given in the question. You need to collate all of that. So that was your updated return. Next is defective return. See, if you talk about prior to 2009, I think e-filing started in 2009. Before 2009, this section was very relevant because people used to file the returns on paper. They used to take the printout of the form, then they used to fill it with hand and then go to the income tax department and submit it. Right? So that was the return procedure of the return. Now, what happens? Now everything is by the system. If there is any error in the return, if there is any validation error in the return, will the system accept the return? Now, if there is any mathematical calculation error or any other error in the return, will the system accept the return? The answer is no. The system will not accept the return. The validation errors will not help, will prevent it from filing. Maithili, just hold on. I have not answered your question. Doesn't mean you will type again and again. I have read your question. Just give me some time. I've started another concept. Now, if I'll go back, then all the concepts are in vain. I'm not denying to answer, but please give me some time, okay? I'll answer all the questions. When I'm discussing a concept, I cannot touch upon other concept in between, right? Okay, updated return, defective return. Defective return is, so there was a, let's suppose there is a defect in the return. Assessing officer finds a defect in the return. Defective return. AO finds a defect in the return. AO will give you notice to correct it within 15 days. Within 15 days time, they will give you the time to correct it. If you correct, it's fine. If you do not correct within the time given, your return is treated as invalid return. Your return is treated as invalid return. Your return will be treated as invalid return, correct? Invalid return means as if you haven't filed the return, as if you have not filed the return, because the invalid return will be discarded, and as if you haven't filed the return, that will be there. That is called defective return, where the assessing officer has the power to call upon assessee to rectify a defect. They will give you the 15 days time, and the assessing officer has the discretion to extend the time. If the defect is not rectified within 15 days, it will be treated as invalid return. The consequential effect will be the same as if the assessee has failed to furnish the return. Where the assessee rectifies the delay after the expiry of 15 days, but before the assessment is made, the assessing officer may condone the delay. But if already they have made the assessment, if already they have made it invalid, then it will remain invalid. Clear? So this is about defective return. Maithili, updated returns means done after revised return. No, the answer is no. I already said updated return can be filed even if you have not filed any original return, even if you have filed belated return, even if you have filed lost return, even if you have filed revised return. Updated return can be filed after any of the scenarios. Just the only condition is it should be beneficial to the department and it can be filed only once per year. Clear, Maithili? Okay. Can we move on? Everyone, are you with me? Can we move on? What is the benefit for the assessee? Maithili, see, the benefit is 2-3 things. Let's suppose, in my case, when I gave you the, you will not understand the benefit right now, to be true. Why so? You don't know about the assessments. Here, let's suppose your return is just 12 months late. You can pay additional 25% tax and earn peace of mind. Let's suppose you don't revise the return and income tax officer sends you a notice. When they will send you a notice, you know how much percentage of taxes they will charge. They will charge 78% tax. 78% tax. It is 60% tax under 115 BBE section. Plus they will charge the 25% surcharge. Total plus 4% says there will be total 78% tax. Getting it? Here you are paying just 25% of the additional. There they will charge total 78%. So there is a benefit. Plus, while you go in the litigations, there you lose your peace of mind. But here, just filing by return, by paying some extra money, you are getting the peace of mind as well. No one will touch you. Right, Maithili? So that's why there is a benefit. In fact, nowadays, when the assessing officer sends an inquiry notice or something, They also mention if you want to file updated return, please file. Government says, see, one, it is reducing the litigation. Second, the government is getting extra taxes. So why not to do it? Fee for filing default in furnishing the return. If there is a default in furnishing the return, let's suppose the due date to refile the return is for individuals, normal individuals, 31st of July. You file the return late. It means you are filing under section 139 for belated return. If you are filing a belated return, then in that scenario, you will be charged a fee. There is a fee is called 234F fee. If your total income, now they were used the word total income here. If your total income is up to 5 lakhs, if your total income is up to 5 lakhs, the fee will be 1000. And if it is greater than 5 lakh, then the fee will be 5000. This is the mandatory fee you need to pay. Okay. 234F. Permanent account number. Okay. Now, till now, the major provisions of return filing are done. We are done with the major provisions of return filing. Now it will be more theoretical. Permanent account number. See, all these theoretical provisions, I'll just explain you, but you need to read it. Okay. Permanent account number, PAN number 139A. A person required to apply PAN. They say who is required to apply PAN and when. Let's suppose every person, if his total income in respect of income he is assessable exceeds the maximum chargeable limit. Let's suppose I am not having a PAN number, but this year I have earned income of 5 lakhs. It is greater than basic exemption limit. So I need to apply on or before the 31st May of the assessment year. Let's suppose my income has increased. My income is increased and it has become 5 lakh, greater than 4 lakh. I need to apply the PAN by 31st of May 2026. 31st May of the assessment year. Same way, if your sales or turnover is likely to exceed 5 lakhs, then by the end, before the end of the financial year, you need to apply PAN. Same way, if you are resident, if you are entering into financial transaction of 2,50,000 or more by 31st of May, same way, every person who is a managing director and all acting on behalf of others on or before 31st May. Now, PAN person required to apply PAN, one rule 114BA. If you are making a cash deposit of 20 lakh or more, at least 7 days before you intend to deposit the cash, you need to apply for PAN number. Saying any person who withdraws cash from bank at least 7 days before the date he wants to withdraw more than the specified limit of 20 lakhs. Why it is required? Can you see? If the person will not have the PAN number, how they will deduct the TDS? How the bank will deposit the TDS of 20 lakh or more? Any person who intends to open a current account, if you want to open a current account, at least 7 days before you want to open a current account, you need to apply for PAN. Very theoretical it is, okay? Plus the PAN number is not required. PAN number is not required in case of foreign company or non-resident. Foreign company or non-resident. If it is the IFSC unit or non-resident or foreign company doesn't have chargeable income in India, they are not required to obtain the PAN number. These you can just quickly read. Come to this nature of transactions. These are important. These natures of transaction are important from examination point of view as well. If you do any sale purchase of vehicle, it is mandatory to quote the PAN number. Quoting of PAN is mandatory. You need to give your PAN number in these transactions. If you are doing sale purchase of motor vehicle, PAN number is mandatory. Opening an account, time deposit account, basic account, all such transactions. Making an application with a banking company, cooperative company for issue of credit or debit card, PAN number is mandatory. Opening a demat account, PAN is mandatory. You are paying to a hotel. See how the examiner will trick you. Paying to hotel or restaurant against a bill. Paying in cash exceeding 50,000. Can you see paying in cash? Cash word is important here. The examiner will say, I have paid through the bank. Is the PAN number required to be quoted? The answer is yes or no. The answer is no, because it is in cash. Payment in connection with travel, again cash, greater than 50,000, mutual fund, company debentures, deposits with banking company, purchase of bank draft, bank time deposits. So all these transactions, please have a look. The examiner can ask you questions on this. Many a times these are the favorite questions of the examiners from this topic. Payment as life insurance premium, sale purchase of securities, right? Sale purchase of immovable property, important. If you purchase 10 lakhs or more, exceeding 10 lakhs immovable property, PAN number is mandatory. Clear? If it is the minor can quote the, even on deposit or bank more than 50,000, PAN of depositor is required to be furnished. The limit is not, I think, 50,000. Where it is deposit of, it is for the cash deposit. Yes, it is for the cash deposit, right? Cash deposit greater than 50,000. See, normally the bank doesn't open your account until you have the PAN number. Let me be clear. So it is anyway satisfied, right? Minor to quote PAN number of the guardian. If minor doesn't have PAN, they will quote the PAN number of the parent. Declaration by a person not having PAN. Let's suppose I am a very small person. I'm not required to obtain the PAN. I am not covered in any of the limits. I am not covered in any of the limits. I am not required to obtain PAN number as well. But bank is asking me the PAN number. Let's suppose I go to the bank. I want to open my bank account, but I am with any of the situation, I am not required to obtain the bank PAN number. So what I will do, I will give a declaration in form number 60 that I am not required to obtain a PAN number. I will give a declaration in form number 60 that I am not required to obtain a PAN number. Right? This declaration we sign. Next. Non-applicability of Rule 114B to the central government role, and these rules do not apply. Central government non-resident, these rules do not apply. This meaning you can study what is travel agent, what is time deposit. Intimation of PAN, who is deducting or collecting its source. For the TCS provisions, deductive PAN is required, right? So you will intimate the PAN. Quoting of PAN in certain documents. If you're in your salary slips and all the certificates of TDS, all these PAN will be required. This is highly theoretical. Just read it once. You will automatically understand it. Requirement to intimate PAN and quote PAN not to apply in certain cases. If you don't have a taxable income, the taxpayer is not required to obtain the PAN. Then you can say interchangeability of PAN with Aadhaar. Can you see the government has focused a lot on linking PAN and Aadhaar? Now then government came up with a notification. They said, okay, in fact, instead of PAN number, you can use Aadhaar number as well. You can use Aadhaar number as well. If you have not been allotted a PAN but possesses the Aadhaar number, you can quote your Aadhaar number. Right? And if you have the PAN, you should intimate the Aadhaar number to the prescribed authority. PAN and Aadhaar linking was a very famous thing which has been in the past. Whatever old PAN numbers were there, all were linked to the Aadhaar. Otherwise, the return filing and all the things were stopped. Quoting and PAN of Aadhaar and PAN and Aadhaar. You need to quote in the prescribed transactions PAN or Aadhaar. Again, cash deposit 20 lakh or more with a bank or cooperative society. Cash withdrawal, bank or cooperative society. Opening a current account with a bank or cooperative bank. You need to quote the PAN number or Aadhaar number. It says quoting of PAN number and Aadhaar number is not required. Non-resident and foreign company if they don't have any income. IFSC unit and non-resident foreign company doesn't have income chargeable to India. This is the same thing repeated we have just discussed. Power of CBDT to make rules. CBDT can make the rules. Kambir Ka asks, if someone misuses the PAN by fake company and ends on burden with a huge tax liability. See, If you simply you're trying to do the fraud with a PAN number, the CBI will catch you, the government will be after you, right? You will be caught. How non-resident of foreign company will pay tax on what basis? Non-residents, if they have income chargeable in India, there are the treaty provisions also we apply. See, non-residents can obtain non-residents don't have Aadhaar, but they can obtain the PAN number by the passport. They need to give their foreign address proof and they need to give their passport. They can get the Aadhaar, they can get the PAN number. So if they have to pay taxes, they need to apply for Aadhaar number in India. They can get it. Vedant. I have a client from USA. That client case, income tax case is going on in India. That client also is also non-resident, not living in the US for last 20 years, but doesn't have Aadhaar of India because they shifted from India to US. Even the Aadhaar concept was not there in those times. Aadhaar came in near about 2011 or 12, right? So they don't have Aadhaar number, but they have the PAN number. They can file using the PAN number, non-resident. CBDT can make the rules. Class meaning of what is Aadhaar number, what is authentication. Failure to file. Again, this is important because many times questions are asked. For every such failure, 10,000 is the penalty. If you fail to quote the intimate the PAN number, Aadhaar number, the 10,000 rupees is the penalty. Quoting of Aadhaar number. Now, mandatory quoting of Aadhaar number in the application. When you apply for PAN number, see, this is also important. This is also important. And the penalty one was also important. Mandatory. If you are now, as of now today, if you want to apply for PAN number and you're resident, you need to apply for you need to provide your Aadhaar number as well. Otherwise, PAN number will not be allotted in the application form for allotment of PAN. And in the return of income, if you want to file return of income today without Aadhaar number, it's not possible. You need to mandatorily fill the Aadhaar number. Quoting of Aadhaar number mandatory in returns filed on or after 1st April 2019. Quoting of enrollment ID. If you have applied for the Aadhaar number but you haven't received, enrollment ID is to be quoted. Intimation of Aadhaar to prescribed authority. It is about the Aadhaar and PAN linking. Aadhaar and PAN linking. I think the last date was 31st December. You need to link your Aadhaar and PAN, otherwise the PAN will be invalidated. Consequences to failure to intimate Aadhaar. If you don't intimate, then again, if you don't link Aadhaar and PAN, there is a fee of additional $1,000, 1,000 rupees that you need to pay. Let's suppose today, if anyone wants to link Aadhaar and PAN, you need to pay a fee of 1,000 rupees because the date has already expired. You need to pay a 1,000 rupee fee, then you will be able to link it. NRA is not filled return. I couldn't get it either. Clarification on consequences of becoming inoperative. If the PAN becomes inoperative, it will be deemed as if you don't have a PAN number. So you need to link it. Provision not to apply in certain cases. Okay. The linking of Aadhaar and PAN. Now someone was asking, what if non-resident doesn't have Aadhaar? The linking of Aadhaar and PAN is not in these cases. If you're residing in Assam, Jammu and Kashmir and Meghalaya, then PAN Aadhaar linking is not required. If you're non-resident, PAN Aadhaar linking is not required. If you're age 80 years or more, PAN Aadhaar linking not required. If you're not a citizen of India, PAN Aadhaar linking is not required. Right? Next concept, scheme for submission of returns to TRPs, tax return preparer. There is a concept of TRPs. You can give a small exam, I think, then you become an TRP. Right? You will be licensed to prepare the income tax returns of the India. But who can be the TRP? TRP means any individual other than officer of a scheduled bank where the SSC maintains an account, legal practitioner, accountant. Can you be a tax return preparer? Can you be a tax return preparer? The answer is no, because you don't even require it. You are a chartered accountant. You don't require the TRP. You already have a very good degree, chartered accountancy. So you don't require a credential of TRP. NRS filed return without PAN and Aadhaar. Yes, non-resident return can be. So no. NR return cannot be filed without PAN number. PAN number is mandatory. Sridhar, PAN number will be required for the non-resident return. Aadhaar number is not there, it's fine. For that, we enter the passport number. An accountant, chartered accountant cannot be a tax return preparer. Legal practitioner, an employee of the specified class of companies cannot be a tax return preparer. What are specified class of companies? See here, if you are employee of the specified class of companies, then you are not a tax return preparer. For this purpose means any person other than a company person whose accounts are required to be audited, right? If you are an employee, give me 1 second. I had written one thing. Right. If let's suppose, see here, this point is important. If you are an employee of specified class of company, then you cannot be tax return preparer. TRP, tax return preparer. If you are employee of specified class of persons, then you cannot be TRP. And what is specified class of persons? Person other than a company or a person who is required to be audited. Person other than a person required to be audited. It means if you are employee of, let's suppose, a small businessman, no audit, no tax audit. It means you are employee of specified class of person, then you cannot be TRP. You cannot be TRP for that businessman. Because you are doing a job at a small place, you cannot be TRP of that person. If you are the employee of a company, right? A company is not required to be tax audited, right? Other than a person required to be audited oblique company. Then you can be TRP of the company. You can be TRP of company, employee of company, or person getting tax audit done. Then you can be the TRP of that company. You can be the tax return preparer for that company. This is the conclusion. So rest, this is very simple. You can just go through it. Illustration number 4, you can go through. Now, this is also important. This portion is important. Persons authorized to verify the return. Who can verify the return? Now, if I am an individual, I will verify my return. Individual himself will verify the return. What if I am absent from India? I am not in India. Then I can execute a valid power of attorney and give a power of attorney. That person will file the return. If I am mentally incapacitated, then my guardian or who is competent to act on my behalf will file the return. If for any other reason I am not able to verify the return, then I need to give the power of attorney. That person will verify the return. So this TRP and TV shows TRP. No. Mentally, how the TRP can? This TRP is the tax return preparer. TRP is the tax return preparer. See, let's suppose. Okay, I'll give you a simple example. Maithili, how does it work? In fact, I had an employee who had taken. In the past, I had an employee. I think 1 year back. That employee has taken the TRP certification. Let's suppose I am a graduate. Let's suppose I am a graduate person. Okay. I want to prepare the tax returns. For tax returns, no such signature is required. Even a graduate person can prepare the tax return if he knows the tax rules, laws. Now, graduate person is preparing the tax returns. Now, tell me that graduate person has, if he qualifies the exam of TRP of income tax, he can become a TRP. And whenever he will prepare a return, he can include his credentials on the return. He get a TRP number and all. So those persons will become the TRPs. Got it? Those are persons known as tax return preparers. When you become a chartered accountant, you already have a highest degree. Now you don't need a TRP certification. You cannot get it. It is just income tax is recognizing you. Income tax is recognizing you that you prepare the income tax return. That's it. Chartered accountants are anyways authorized. Okay. Fair enough. But you are a TRP. Clear. Okay. If you are HUF, if it in case of HUF, Karta will verify the return. How do you verify the return, by the way? Normally it's OTP or the digital signatures. Or if Karta is absent from India, any other adult member of the HUF. If Karta is incapacitated, then any other adult member of the HUF. Company, if the company has a managing director will verify. If the managing director is not able to verify unavoidable reason or there is no managing director, then director of the company. If the company is not resident of India, then managing director of the company or any person who holds valid power of attorney. Clear? When the company is about to be wound up, then liquidator will sign. Liquidator will sign. Where the management has been taken over by central government, they will appoint the principal officer of the company. That person will sign. If the company is under the resolution process, IRP insolvency process, the insolvency professional will sign. In case of partnership firm, managing partner signs. If there is no managing partner or there is unavoidable reason, then any partner of the firm, not being a minor. LLP designated partner sign. Unavoidable reason or there is no DP, then any partner of the LLP can sign. Local authority principal officer signs. Political party chief executive officer signs the return. Any other association, any member can sign. Any other person, that person or some other competent person on behalf can sign. Any other person in case of company and all, you can just read it. This is about your chapter for the filing of return. Now see, only at the last, I have skipped a few topics which are not important, which are very, very theoretical. Very, very less chances. Just give it a reading. They're not at all difficult. Clear? Now, if you have any, we are done for this chapter. If you have any queries, you can ask. If anything, any query I have missed in between, you can type it again. I will take up all the queries. Right? How was the class? I hope you would have enjoyed. So I have taken approximately 9 sessions, I think. These were the last 9 sessions we took together. So I think only one chapter is left. Only chapter number 9 is left. That will be taken by some other faculty. So I hope you would have enjoyed the sessions. Once we file a return under default regime, can we again shift out to the default regime for the next year? Sushmita, let's suppose you opt for new scheme. Next year you want to go for old scheme, you can go, but there is a restriction. If you go for there, if you have income from, if you don't have income from PGBP, you can change every year. There is no problem. But if you have income from PGBP, now in that scenario, if you have once changed to the old scheme, you can change. But if you want to shift back to the new scheme, you can change once. From old to new, so from new scheme to old scheme, you have gone allowed by filing the form. From old scheme to, if you want to come back to the new scheme once in a lifetime, it is allowed. Then in future, you will never be allowed to go to the old scheme. That is the provision. In insolvency professional can be CA, insolvency with expert advice. Yes. So see, in case of insolvency, what happens? There is a insolvency act that came in 2016. Now, even a chartered accountant can be an insolvency professional, right? That person should be qualified. There is a lot of experience requirements. Now, insolvency professional can be a CA, right? They can be a CA with insolvency certification, right? At the time of revised return, how will the AO assess in September month? Anil, tell me, if you have not filed your return, if you haven't filed your return, see, normally if I tell you practically, the AO will not assess before the last date of the return. The AO doesn't assesses before 31st December. But in case the AO assesses, in any case, they have given a provision. Let's suppose you filed a return in July, AO assesses that return, and they've raised some demand, you cannot file a revised return now. Next, another thing is if you haven't filed the return, but AO knows you are a very big taxpayer. See, on the big taxpayer, always the AOs have a eye on the big taxpayer, because they want to know, because we will get a lot of taxes from here, and this is how we will meet the targets. They have eye on them. So if you don't file the return, the AO says, okay, why have you haven't filed the return? Your return, your due date has passed. I will assess your income. They can do an assessment. In page 7.77, page number 10, computation of advanced tax and net agriculture income has to be considered for purpose of computing advanced tax. Composite business income with estimation we applied with calculating. See, first of all, Harshil, you are asking, while calculating the advanced tax agriculture income, you would have already studied in the computation of it. Have you studied in chapter number 1 how to consider the advanced tax, in how to compute the taxation in case of agriculture income? Have you seen this? Integrated calculations you do, right? So those same calculations you will do while calculating the advanced tax. You will also estimate your agriculture income. Next is composite business income estimation would be applied while computing advanced. See, while doing the advanced tax, you calculate as if you are preparing the return with the best estimate of incomes. If deadline is 31st August in first year, I need to file the return on 10th of September, then I also have to pay 25%. Anchal, you want to be able to file till the time you have time for revised return, you cannot file updated return, and you will not file ever. First of all, the system will not allow. Second, you will not file. Why? You will do a foolish mistake. If you can file the revised return, you will file the revised return first. There are no limitations in revised return. So you, in fact, let's suppose if after 31st of July, the due date has passed, you want to file revised, till the time you have time for revised return, you cannot file the updated return. Even the functionality will not allow it. Yeah, Vedant, thank you very much. And yeah, hopefully every one of you will clear the CA. First clear CA Inter. And okay, one advice to everyone is, after clearing CA Inter, please do find a good articleship. That is very important for the CA course. If your articleship will be strong, see many cases, now a lot of income tax cases I have done in my CA articleship, right? So you will not get the exposure anywhere. So it's better you find a good, see, all the firms are good, just you need to see which type of work you want to understand, which type of work you want to do, right? Where from, fine. Vedant, first clear the exams, right? First clear the exams, first focus on the exams fully. See, Vedant, once you will give your exams, you will have 1.5 months for the results. In that time, you will get to know automatically. You need to do a training as well, or IT training and MCS training. In MCS training, they will tell you a lot of things about articleship. Clear? Any other queries? Anil, WhatsApp number, see, probably if you will one by one send me the queries, that will be problematic for me. What I have done is, I have joined the LVC intermediate group. If you will see, I have already joined the Telegram group. If there is any query, you can send me on the Telegram, I'll reply it. But please allow me 24 to 48 hours time. Normally within a day or two, I reply. But please do not expect the replies within 1 or 2 hours. I'll try it, because it's not only I teach here, I teach other subjects as well, and I have my own practice as well, right? I have my CA practice as well, and I teach other subjects as well. I teach US taxation as well. So I'll receive many messages, so maybe I need to reply a lot of messages, so that's why it takes some time. Okay. Have you Kambirka, have you applied for the ICAI scholarship? You can also get the scholarship from ICAI. See, one thing, okay, I'll tell you, those who needs any financial support, ICAI also provides the scholarship. Please do check out of other programs. Okay. Yes, because ICAI gives a lot of scholarship. Another thing is there is one of our central council members. I think Sanjeev Singhal also runs. I think they also run a campaign where they provide the support to the scholarships to the. I think they run like CA Parivar. I think they run. So I have listened about it. So many students, you can search about CA Parivar, right? One of our central council members is there, CA Sanjeev Singhal. So he also runs, he also supports many students who needs financial support, and they support you through the entire CA journey for the entire CA course, fee and everything. So if anyone has a need, you can just connect with them as well. But it should be a genuine case. They will support all genuine cases. This is what I've heard of. Sridhar, no such weightage has been defined by the I believe. See, the first question that you get from the that you get as a compulsory question will be the combined tax will be the combined question. It means you need to compute tax and multiple provisions. When you will go to chapter number 9, next chapter, you will do the comprehensive calculation of tax. After this comprehensive calculation of tax, you will get to know about the first question and practice the model test paper. Okay, I had told you to cover that two sessions. Has anyone looked into it? These two sessions, 23rd and 25th of March, I had taken for the revisions for these topics only. These two sessions cover the comprehensive questions as well. These two sessions cover the comprehensive questions as well. Please do look at these two sessions, okay? 23rd of March 2026 and 25th of March 2026. These two sessions I have taken. You can find the recording on the portal itself, right? These two sessions on these topics only, chapter number 4, 5, 6, 7, 8. I have done a lot of questions. Let me tell you, I have done a lot of questions. Have you uploaded those questions? Anil, the questions in that, these questions you are asking me? Anil, what I'll do is, okay, LVRC comprehensive questions, revision videos. Okay, I have already given it to the team. They should be uploaded. But if you want, I can upload it in today's session here as well. What I'll do is, okay, these are the questions. I will upload it along with the answers, okay? So these are the questions and answers I had taken on 23rd of March. These were the questions, and I have also pasted the answers here, right? So this file I will upload here, and this file also I will upload 25th of March. In today's file I will upload. You will get all of this in today's one, okay? So these two files I will upload in today's session, and in the class file, this is the solution to them as well, okay? What I'll do for these two class files were also there. So I will upload all of this in the today's one, okay? So you will find the today's Excel. So today you will find 6 files now. One is this chapter, whatever editing I have done. Second is the class file for today. Third one you will find, in fact, what I'll do is I will combine all of this. These are the, maybe let me upload it separately only. For these, these questions and answer for the 23rd of March and 25th of March, and the class files for both of these classes. I will upload these 4 files as well. So today I will upload 6 files. Okay, you can practice it. Okay, any other queries? Any other questions? I hope this is a substantial portion of income tax that you people have covered with me here. Okay, so I hope I was able to explain you well. If there are any queries, you can see. You make. I have seen your Telegram group. You, why don't you people, if you have any query, just put it in the Telegram group. The peers can answer. That's why encourage the discussions in the group. Okay, that way you can benefit from each other. Okay. From July, you will teach new income tax if we have doubts after this income tax. Until in the new batch, I think they're allotting me some classes for these topics, but I think those classes will be in September. Those classes will be in September, I think. They've given me a tentative schedule. I think those classes will be in September. But yeah, if you have any queries, surely you can ask. You can telegram give me, but please give me some time for telegram to respond. Okay. Okay then. Thank you very much. I hope you would have enjoyed these sessions. I can see no other queries. I wish you all the best. Thank you very much. Okay. And whenever you clear your exams, do share your results. Thank you. Bye. Yes, we can close the session. Thank you.